Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the man, myth, the legend, goes by Matt, the mortgage guy. How you doing, buddy?
I'm doing pretty good, Mike. I got to say, this market is a little bit exhausting. The volatility, the volatility, I'm usually pretty energized. I feel like I've just been in a 12-round fight, man. These last few months have been volatile.
Yeah. And again, you're helping a lot of buyers and a lot of them are feeling it. Hopefully a lot of them listen to you over the last couple of weeks with the like it, lock it mindset that you've been sharing. I want to just talk about two things. First, yesterday, I believe it's been reported, at least I've read it a couple of times, that I think it was Mortgage Bankers Association rates got over 7%. They got to what I read was 7.08, which means we hit 7% before the end of the year. We hit it in September. I didn't think we'd hit it till December, but we hit it. So is that factually correct?
That is factually correct. The 7.08, I think, is Mortgage News Daily. They do their average.
Thank you. I may have misquoted the source, but yeah, I
read
something.
MBAs usually lag, so it might not show up until next week that, if they touched 7 on their weekly average. But nonetheless, I got a bunch of phone calls yesterday. I got an invite to do a live with the real estate agent, and rates have, and we talked about it yesterday. The thing that, 7% is one thing. We understand in this market, like, that shocks a lot of people, payment shock more than anything else. But we were at 4.99 early August. It's been less than 8 weeks. It's been less than 8 weeks that we've gone from 5 to 7. Now that hurts, because
that hurts. Yes.
I think me and you and others that really, really watch it and try to pay attention to like how it affects the buyer. When we got to 5, we thought to ourselves, man, we thought this would have more impact. It didn't. 6 was the magic number where demand fell off a cliff, came back to 5. We got some demand back, now to 7, and we can't know today what effect that has, besides me saying less applications, conversations, with buyers are not as plentiful. The conversations we do have, these buyers aren't excited to go out there and write offers and pull the trigger with a $3,800 a month mortgage. So,
well, the Fed's getting what they want. The Fed's coming after housing, and transactions are the first thing to go. I mean, it's getting what he wants, I think.
Yeah, I mean, 7% is gonna do it. I mean,
congratulations, pal. You just crushed the spirit of the housing market.
Yeah, I mean, I've ran numbers, and granted, we've got, different buyers doing different things to get lower rates. And we've got, on the broker side, like 7%, even if you're buying at, I think 389 was the latest number I was using just as like a median.
Sure.
And 10% down, which is more than average first time buyer puts 7% down. I think that's what the latest study said.
Correct.
So I use 10 just to be a little bit generous. And we're still, knocking on a $3,000 a month payment when you put tax and insurance in there. At 7%, 389 purchase, 10% down, $2,857 a month. And some people are going to put 5% down. So they really are at that $3,000 a month when you include mortgage insurance and taxes and homeowners. So it's certainly having the consequence that you would think, right? Just crushing demand.
Yeah. Well, on the good news is it looks like the Bank of England pivoted. They've gone from quantitative tightening to quantitative easing. They're buying the long end. And I think what is happening in our market is Wall Street and the bond market are betting that a Fed pivot is around the corner. So I haven't checked in a couple of hours because I've been on some interviews, but I'm guessing the 10 years down today, which maybe brings mortgage rates down.
Oh, for sure. I mean, because it was funny, the calling the 10-year going over 4, and we were all talking about, was it mid-October? Is it late October? Is it
yesterday?
It was 3.98. You're just scratching on 4. Now it's down to
it hit, just so we're clear, it hit 4 for a whisper yesterday evening. So we officially hit 4.
Holy guacamole. Well,
less than 24 hours later. It's crazy.
In the true spirit of a ton of volatility, we're now down to 3.74. The Bank of England's. Yeah.
Oh, yeah.
And rates are 66 basis points better. That 7.08 average yesterday from Mortgage News Daily is down to 6.82. So we've seen.
Oh my God, look at the bond. Oh my goodness.
So yeah, there are green days still. There are some green days in mortgage.
That's got to be a ripping. I mean, I don't. That's again, I'm looking right now. CNBC down 21 basis points, or whatever they call it.
Right. Yeah. 21 basis points on the 10-year from where it opened.
374. It hit 4% yesterday for a mere window. Wow.
I'll tell you what, though, I was going to say real quick for people that are like, whenever you have one day of bettering rates, people are like, here we go. When are we going to be at 5.5, Matt? I can almost promise you, like, don't fall for this head fake. Like, rates are getting worse, and still all the advice from the smartest people I follow in mortgage is lock it. Even on a day like today, you get a couple reprices, lock it by end of day. We are in a time where, the Fed, while the trend
is clear,
right? They may pivot towards the end of next year. The next two meetings are clear. The dot plot is clear. Like, we're moving interest rates up. We're continuing to crush demand. And so you're still locking stuff. And if you happen to get in on a day where, only cost you 1.5 to get a 5.99, you take it and you lock it. You don't say to yourself, well, maybe I can get it for a point tomorrow if we get 50 basis points better. Just take what you got and lock it. Whether you're working with us, whether you work with anybody else, quick plug, greatmortgagebroker.com. I've still got, 40, 50 people a week coming there, getting good advice from me and my team, no matter where you're at in the country. So, do the work and get yourself pre-approved. But my advice there is still the same as it's probably been for a year. If you like it, lock it.
Yeah. I think the trend is clear. The Fed's been, again, I think the bond market and the stock market are trying to push Powell into pivoting early, and be clear about what a pivot is. A pivot in Powell speak would be stopping, right? It would be stopping, let alone cutting. I don't think they're going to get what they want. I think Wall Street learned that if they throw a temper tantrum like they did in 2018, that they can get the Fed to reverse course. I don't think that's happening this time. The Fed doesn't pivot with inflation at 8.3%. You can get into pivot when inflation's 1.7, but at 8.3, which I think was the last reading, it's not going to happen.
Yeah. I mean, if some of the guys that are a little bit more aggressive on the timeline on the pivot are right, then we're going to have really good inflation readings, meaning coming down a lot, October, November, December.
Yeah.
And then, early next year, we might see some rate relief because I think rates will follow inflation, but that's still yet to be seen.
Yeah, that's actually a question. And maybe you know what? We're going to make this video number 2. I actually think we'll just tease it here. I think rates start to get better once Powell pauses. I don't think Powell has to cut to have mortgage rates get better. So I will leave that tease here for video number 2. Matt, where can people find you?
Greatmortgagebroker.com. Reach out to me and the team. We're happy to help. If you're doing the work, part of the work is really understanding the finance side, what you qualify for, what the payment looks like, whether you're an investor or a first-time home buyer, you got to know your numbers. We're happy to help. Awesome. Greatmortgagebroker.com.
Awesome. Thank you.